Activities at the Treasury bills market is skewed towards the primary market auction today, where the Debt Management Office plans to offer Treasury bills worth 81.7 billion naira across tenors. And our Bankole Odusanya is the head of fixed income trading at UBA. He joins me now for a midweek and a half-year analysis of the market. Thank you so much for your time today, Bankole. Interesting times we're seeing now. We're crossing that mark, the half year into the markets here. But I'd like to get your assessment of how we've seen the market play out so far, and also waiting on the Treasury bill auction today, since we're seeing improved liquidities here.
Thank you very much, Ken. Well, this week, it's a liquid week. What we're seeing is that federal allocations have been paid, and then we've seen maturities also coming from Treasury bills and OMO. So what we are seeing is that there's likelihood of further yields dropping at the stop rate at the NTB auction for today. The stop rates will be released by between 6 and 6:30 p.m. When the rates come out, you would likely see that it stops at between 9 and 9.2. In the last few weeks, we've seen NTB stop rates drop from 9.75 to 9.65 and then come to 9.4. So it's simply because of liquidity and fewer issuance by the Debt Management Office. One major issue on the other side, on the bond market side, is that activities are actually slowing down there because of cautious trading since the auction. And it's caused by two major reasons, being the government wanting to borrow more by issuing a supplementary budget of up to about 800 billion naira, and then the calendar for third quarter is yet to be released by the Debt Management Office. So there's still some uncertainty and gray lines there. So we're seeing that there's some quiet on the bond market. But on the Treasury bill side, it's quite active because there's liquidity, and then there's fewer issuance on the OMO side. So as the maturities come in for OMO bills, we're seeing those funds being diverted to the NTB end, and there's been continuous decline at the stop rates for the NTB auctions.
But where do you see yields at the secondary bonds market post the auctions in June?
Okay, for bonds that stopped at 12.7 and ranging from 12.7 to 13.7, we are seeing bids as high as 14%, simply because you do not want to be sold to at auction levels. It's expected that because the government is willing to borrow more and probably issue a supplementary budget, that yields could go further high. That it just shows a little bit more of desperation on the government wanting to borrow more, and then the investors want to price these debt instruments higher, simply. So basically what we are seeing is that it's a bearish market on that end. Everybody wants to sell, and in order to protect your bid, you simply increase what you're showing on the bid end. So we're seeing 14% for bills that stopped at 13.7 and 13.5 levels.